Hello everyone, welcome back to this week's Technical Insights. Last week, global equity markets made an intense comeback from the violent rout that we started at the beginning of August. Positive data from the US largely allayed fears of a recession, and the US stock rose on Friday as investors closed out the best week of 2024 so far. Inflation reading from the CPI released last Wednesday were largely in line with analyst expectations, bolstering hopes that a soft landing scenario was still possible. And retail sales number released on Thursday came in much stronger than economists expected, while weekly jobless claim also fell. Fed Fund futures have also been pricing in lower rate cuts expectation from a 100 basis point cut on August the 5th to last Friday's 75 basis cut by end of 2024. This latest reading offered evidence that recession fears which sparked the global sell-off earlier this month were overblown and previous recession fears were clearly overstated. For the trading week, the Dow Jones Industrial Index advanced an impressive 1,162 points or 2.94% to retake the 40,000 handle and close at 40,659 points. Broad index S&P 500 added 210 points or 3.93% for its best week since November last year to finish at 5,554 points. Tech-heavy Nasdaq Composite Index was the best performer among the three US indices, jumping 886 points or 5.29% to 17,631 points. Following the comeback last week, the S&P 500 is now just 2% shy of its 15 July record high. Shares of Nvidia were among the big winners in the technology stock last week with a gain of more than 18.9%. Apple and Microsoft advanced roughly 4% and 3% respectively for the week as well. Both the S&P 500 and the Nasdaq Composite Index has now clocked 7 consecutive winning sessions as investors step back in to buy since the big drop that we observed last Monday. Corporate earnings continue to show strength as the latest earnings report starts to trickle in. About 93% of the S&P 500 listed firm has posted their result as of last Friday. Of those, more than 78% were above market or analyst expectation. While the lion's share of the report has already been released, we still have some big names earnings to watch for next week. Big retailers like Lowe's, Target, Macy are all slated to publish their earnings alongside tech names such as Zoom, Workday, and Palo Alto Networks. In Asia, Hong Kong stocks also recorded the biggest gain in more than 2 weeks, spurred by a tech sector rally by JD.com after its strong earnings and the PBOC of China pledged more policy support, bolstering the mood for the market. The Hang Seng Index added 1.88% on Friday and 1.99% for the week to close at 17,430 points, recording a second straight weekly gain. The Hang Seng Tech Index also jumped 2.21% on Friday and 0.65% for the week to finish at 3,459 points, also its second straight week of gains. E-commerce platform JD.com rallied 8.91% to Hong Kong dollars $108.20 to become the biggest winner among the 82 blue chip companies in the Hang Seng Index. JD.com quarterly profit nearly doubled despite the intensifying competition. Its peers, Alibaba advanced 4.8% to $80.10 after it reported a 4% revenue growth in the June quarter, and Tencent gained 1.1% to Hong Kong $372.60. Sentiment got a further boost after Beijing hinted at more supportive measures. In Singapore, our STI index rallied on the week together with the regional markets. Fresh data from Singapore Nordox in July grew 15.7% year-on-year, having declined 8.8% in June and massively beating economists' expectation of a 1.2% growth. Total trade grew by 13.7% in July, building on the 1.2% increase in June as export and imports increased. On Friday, our benchmark index rose 1.12% or 37 points to 3,352 points. For the week, our STI index is up 91 points or 2.79% to record its second best week we see this year, behind the 3.26% weekly gain we saw in late April a few months back. Among the index constituents, on Friday, Mapletree Pan Asia Commercial Trust was the top gainer, rising 2.42% or 3 cents to $1.27. CapitaLand Invest also performed strongly, gaining 2.39% or 6 cents to $2.57. Our three local banks also finished in the green, with DBS again being the top performer, up 2.3% or 80 cents to $35.56. Meanwhile, OCBC added 2.1% or 29 cents to $14.31, with UOB climbing 1.3% or 40 cents to $30.43. So for this week's analysis, let's look at the top two gainers, Mapletree Pan Asia Commercial Trust and CapitaLand Invest. First, let's take a look at Mapletree Pan Asia Commercial Trust, often referred to as MPAC. MPAC unit price rose 2.4% last Friday or 3 cents to $1.27. We noted from the chart that MPAC unit price has been on a downtrend in the first quarter of this year. In the second quarter, from the middle of April to the middle of July, their unit price starts to consolidate around the year-to-date low, which is at a $1.18 level, found on the 19th of April and the 15th of May, forming a strong double bottom support formation. The top side of the consolidation level can be seen at the $1.30 level, which is the high on the 5th of June. More recently, in July, we saw MPAC unit price broke above the 5th of June high of $1.30 on the 15th of July and hit a new high of $1.36, which also tested the red color line that you see here, and that is the 200 days long-term moving average, before coming back down into the consolidation channel again. We also noted that on 15th of July, after hitting a high of $1.36, the RSI went to a 73-point reading, triggering an overbought signal. So it's not a surprise to see that the price retraced back to a low of $1.21 on the 12th of August. Looking at the indicators now, the MACD is showing that the downtrend momentum that we observed in July and August has been subsiding, at least in the last 4 trading sessions, as the MACD line starts to converge towards the signal line. If the MACD line is to cross above the signal line and the zero baseline, it could signal the start of another uptrend. The RSI also crossed the 50-point neutral mark last Friday to a reading of 51 points. This indicates that the price is starting to gain uptrend momentum again. So for investors looking into getting back into MPAC, you can consider the low on 12th of August at $1.21 to take a long position targeting the near-term resistance, which is the upper bound of the Bollinger Band over here at $1.33, which now also coincides with the long-term moving average, the red line that you see here, which is the 200 days moving average at $1.33 as well. Or you can target slightly higher, which is the 15th July high at $1.36. Next, let's take a look at CapitaLand Invest, often referred to as CLI. Last Friday, CapitaLand Invest performed strongly and gained 2.39% or 6 cents to $2.57. Looking at the price chart of CLI, we can see that the share price has been on a downtrend in the first 4 months of this year. Subsequently, the share price also consolidated into a range-bound formation, with the low found on the 19th of April at $2.44. And the high can be found on 15th July at a price of $2.84, which also tested the red color line, which is the 200 days moving average. And subsequently, prices retraced back downwards again. Last Wednesday, the share price hit a new low of $2.42, which triggered the oversold signal in the RSI, testing the indicator 30-point level again. And on Thursday and Friday, CLI share price rebounded, and you can see that on Friday, it had a very good performance. Looking at the indicators now, the MACD is showing that the downtrend momentum that we observed in the last 4 weeks has been subsiding, at least in the last 5 trading sessions. And the MACD line is starting to converge towards the signal line as well. The RSI has also rebounded from Wednesday's 30-point reading to the last Friday reading of 44 points, which is a strong uptick in momentum reading. So for investors looking at getting into CLI again, the $2.44 low on 19th of April or the $2.42 low on last Wednesday could be possible entry levels to look at, with a near-term resistance target at the 15th July high of $2.84. And these are the updates that I have for you this week. If you do find this information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insight.